GM, GM guys, welcome to another tutorial video. So today is going to be a quick one. I'll be doing a tutorial video on how to use your Bitunix account to trade futures. Okay, if you are new and you are interested in future trading but you don't know how to set up your trade, set your TP, your stop loss and all that, this video is for you. So watch this video. I'll be posting it on YouTube because I don't know how long it's going to be. I'll be dropping it on YouTube, so please watch this video on YouTube and please like and subscribe, and also share to your community. Okay, we are already on Unix interface. So this is the home page. And as you can see, my account is already funded. I funded this account $20, and it has been grown to $58 now. So first thing first, let's start now. So if you look under here, you follow my cursor, you see market, you see futures, you see trade, you see assets. If you are interested in spot trading, which is not what we are doing today, you come to trade. But we'll be talking about futures, so we basically stay on futures. Okay, you tap on futures. So what do you do? First of all, before you start trading, you must have funded the account. So for you to fund the account, you click on assets. When you click on assets, you click on deposit. You see this deposit button here, click on it. When you click on it, you click on deposit crypto. Click on deposit crypto. And you click on deposit crypto, it will open and show you all the available crypto you can deposit, but all we are after here is USDT. So click on deposit, click on USDT and your wallet address. Sorry, first of all, you ask to select network, so you can either choose any network you want to select. For my Web3 and on-chain bodies here, we deal with so many chains, but once you select any chain you want to deposit, let me assume you want to select maybe Solana network, or maybe you have money on your Solana and you want to deposit Solana USD. So you click on Solana. There is optimism. Every network is here, so choose anyone you want to choose. Let's use Tron network as an example. So you click on Tron and copy this wallet. Once you copy this wallet, go to whatever exchange you want to deposit from, then deposit from there. Then you will now get your balance. Once you get your balance, it will be here. You'll be seeing it here in your total assets. So second thing, when you now go back to your future trading interface, this is exactly the way it's going to be. Initially, this is your future balance. Follow my cursor, please. This is your future balance. My own is currently at 53 USDT. So normally here is supposed to be 0. So once you have deposited, just click on this sign button here, or you can easily go to home. Sorry, you can easily go to assets. Go to your assets. Go to assets. You see this transfer button here. Click on transfer. If you click on transfer, you will now transfer your funds from spot to futures. Okay, if you have any USDT on spot balance, you will see it here, available. You will see it available USDT. Then you now select the amount you want to deposit to your future account. Then now click on confirm. That's it. Then the money will now be here on your future balance. Do you understand now? So let's move to the next step. How to place a trade. For an example, let's use that. Let's maybe say that you want, there is a signal you want to long a BTC. Sorry, okay, is it BTC? Okay, I have my open trades. I have some open trades here too, so don't mind that one. We'll be opening a new one for an example, but let me tell you how to use all these things here. For an example, here there is a cross this thing here, cross margin. I'm using cross margin. Let's enter there now and study it. Let's study it. What is it? Okay, now there are two modes of margin you can use. We have cross margin and we have isolated margin. We have cross margin and we have isolated margin. So you choose the one you want to use. Hold on. This is isolated, and this is cross, isolated and cross. So what does this thing mean? What it means that, let me start with the cross margin. Cross margin now means that my current trade, if it's going against me, it can be taking money from my future balance, from this balance I showed you here. Maybe my trade is going against me, it can be taking money off from my balance to hold my position, just in case, so that maybe I will not hit my SL so quick. That's when you, maybe you know what you are doing. You can use this exactly when you are doing you want your stop loss to be over 100%, you use cross margin. But when it goes against you, it can be so volatile, and it can take so much money from your account. That's when you see people getting plus 200, minus 200% PNL, losing minus 200% of their portfolio. So, but the most important or advantage of cross margin is that it helps you hold your position more longer, maybe until the market start going your way. Okay, but you have to be very careful so that you not lose all your money by trying to hold your position. Then isolated margin, which maybe most newbies and people with low account balance use, is you, when you open a position with $10 or $5, your position is strictly open with that amount. It doesn't have anything to do with your external balance. Okay, when you hit your SL, you hit your SL. When you hit liquidation, you are only losing that amount you are using to open that position. It's not going to extend to your balance. So that is what this thing is. I love using cross margin because of the system of trade I does. Okay, that's why I like using cross margin. So you will see the reason why I like using cross margin in this tutorial now. So let me assume now we want to open a trade. Currently BTC is showing some signs of weakness. So I'm going to pick a currency pair now. Let me say, let's just go. We are trying to open a trade now. So let's select a pair. Okay, let me say internet computer. Okay, internet computer, this ICP. Let's choose ICP. So I want to open a short trade. I've selected the margin type I want to use, which is cross margin. Then I will now select the leverage I want to use. This leverage, see it as a multiplier. Okay, that's the easiest way to tell you what it does. See it as a multiplier. That means how fast your trade goes, whether at the profit side or the losing side. Okay, so the more you increase your leverage, the more volatile your trade is going to be. So always be careful while increasing leverage. Okay, so now this is initially at 20s leverage, so I'm going to increase it to 75s, or let's use 50s. Let's use 50s, and I will now select okay, we want to short. Then this limit, what does it mean? This limit order is a type of order. We have so many of them, but the one we'll be facing today is market and limit order. So what limit order does is that it buys at a specific price that you set by yourself. You set a specific price, then the order will pick when that price reaches, when the token reaches that price, it will pick automatically by itself because you have set that price. But this market order, which we are going to use for this trade, market order, when you open a trade, it will execute immediately with the current market price. That is why it's called market order. So see what I'm going to do now. My balance here is 53 USDT. So I will use this bar here, this scroll bar here, to select the amount I want to use. So be looking at this open long and open short. You will see the amount there that is being counted. So when it reaches the amount you want to use to open the trade, you stop. So it's currently at $2.6. So that is what we want to use and open this trade, 2.6 USDT. So we open it. We are opening this trade at current market price. Do you understand? So now click on open short and now confirm. Okay, and confirm. So this trade has been opened. This is it here. So we now move forward to set our take profit and our stop loss. This is where we do that here. This is TP and SL. We click on TP and SL. Once you click on TP and SL, this is the TP market. So we now put the price we want to take our profit. Let me say, if market goes to, if this token goes to 2.80, the market should close and give me profit. Or let's say 2.70. Okay, 2.70. That's about 572%. Okay, then what should be the stop loss? Let's say if we lose, because I'm using cross margin, this I can lose more than 100% of it, this trade, because I'm using cross margin. So I want to hold this trade, I want to hold this position until I start using 120% of my initial investment, which is $2.6. Okay, so and at this stage, sorry, okay, let me set it. This is by PNL. Let's set it by ROI, return of investment. So I will put percentage 120%. If my PNL counts to 120%, it should close my trade, and I will take the loss of 2.9 USDT. Do you see it now? I will now click confirm. So this trade is already up and running, and has been guided that we have already set our TP and our SL. So this is how we'll be doing it, little by little, little by little. Even an account balance of $100 should be using at least $2 to be opening such trade with the amount of margin I just leverage I just used now. If you have a $10 balance, you should be using like 0.5, 0.4 to be doing this trade. Your target is not to grow your account towards buy, but by little little by little, you can do it. I deposited $20 and now it's up to $60. Okay. All right. So this is how you should be doing it. So if you have any other question, you can ask on the comment of this video, so we can answer you. This is a tutorial video on how to use Bitunix, and I believe that with this little tutorial you should be able to find your way around and be profitable. So thank you for watching. Remember to subscribe to the channel and like this video. All right, thank you and see you next time.